Hello, welcome back in March's market update. I'm Tony Marlette Jr. at Brookside Tax and Financial Group. We're obviously in full swing of tax season. Let's take a look at some things that are going on. Markets in February were down across the board on the stock portion, ranging from the S&P 500 being down a little over 1% and the Russell 2000 being down over 5%. That's to be expected when markets are down. The small caps tend to take the biggest hit. The bond market, the aggregate bond index, was up a little over 2% for the month. So there's obviously been some headlines dominating out of Washington, and this was not unexpected necessarily. Some examples include Department of Government Efficiency, or DOGE, cutting spending, tariffs, or as you may refer to them as reciprocal tariffs. And then there's also been some geopolitical concerns with the relationship with Ukraine. The influence of noise is usually overrated. Getting in and out of the market based on news and views never works out. Remember, we've talked about this before, how getting in and out based on temporary short-term events, you have to be right twice. You have to be right on the way in and right on the way out. And that's something not many, if any, people are able to do. Markets are almost always ruled by fear and greed. Just remember, real growth actually occurs when companies thrive and grow over time and they increase their earnings. There's obviously a range of possibilities that can happen with any of the issues that we discussed earlier and some of the ones that are going on. So, for example, with tariffs, could we have more balanced trade, or do we go to a trade war? With DOGE, do we have job uncertainty, or do we get a more effective use of tax dollars? Finally, with the geopolitical risk with Ukraine, do we damage the relationship, or do we help negotiate an end to the war? All of these things, again, it's a range of possibilities. So what are investors to do? The first thing, and it sounds very basic, is to just control the controllables. Rebalance, use protection strategies, and take advantage of long-term growth opportunities. Risk is always going to be abound in the market. Remember, there's different types of risk. We usually just shift from one to the other. Your plan should acknowledge this, and that's both in the good times and the bad times. You should only change or make changes to your portfolio when your goals or your time frame changes. If you'd like to review your portfolio with us and go over your circumstances and your strategy, I encourage you to do so, especially if you're here during tax time. You can schedule an appointment with your preparer, schedule up front, visit us online, or give us a call. Reference this video, and you'll get a complimentary copy of one of our books on retirement planning and estate planning as well. From all of us at Brookside, we thank you for working with us, and we continue to look forward to working with you.